Here's all what you need in order to buy a $400,000 home. I'm a mortgage broker here in Florida. I've helped hundreds finance real estate, and here's how all the banks calculate this. So there's really four main parts, and we're gonna go into detail on each one. Number one, you'll need a credit score. Number two, they'll look at your income. Number three, you'll need a down payment. And number four, there are closing costs that are associated with it. So the first thing we're going to go over is your credit score. So technically you can go down to a 580. They'll take a 580 credit score, but I'm going to set you up for success. And with the 580, you're going to get an extremely high interest rate. So here's a couple things you can do to increase that score. Number one, if you have any collections, you want to get them deleted. So you'll go to the collection agency and negotiate for a deletion letter, and that will erase it from your credit report. Number two, if you have any credit cards, you want to keep the balance below a 30% utilization. So if you have a limit of $1,000, you want to keep it below 300. And if you don't have a credit score at all, the fastest way to get there is to open up a secured credit card, use it, pay it off, and in a couple of months you'll have a score. So number two, income. So as far as income goes, here's how the banks calculate it. They look at two parts. They look at the proposed mortgage payment, they add up your monthly debt, and you need roughly about 2 times the amount of income as opposed to your monthly debt. So in this example, a rough mortgage payment for a $400,000 house is $3,400. This includes your principal and interest, your taxes, insurance, mortgage insurance. Then in this example, we're using $1,000 of monthly debt. So this would be car payments, student loans, credit card bills. So we add up both of these. So it's $4,400 a month of monthly debt, multiply it by 2. So you'll need a rough average of $8,800 a month of either household income or single income, and this equates to about $105 a year, and they look at your gross income, not your net. Down payment goes, when you're a first-time home buyer, the minimum down payment is 3%. Now, there are programs that will give you the 3% as a down payment assistance, so ultimately your down payment would be 0, but it's really important for you to know the terms because a lot of times there are repayment agreements associated with it. Now, if you're not a first-time home buyer, if you've owned the home for the last 3 years, then your minimum down payment for a primary residence would be 5%. So you are going to have closing costs, which is a percentage. It's around 3 to 4%. So this on a $400,000 house is going to be around $12,000 to $16,000. And closing cost is the cost of transferring ownership from the seller to the buyer, and also a portion of it is setting up what's called your escrow account, and that's where the mortgage servicer keeps the cushion for your home insurance and your property taxes. So there's always money in the account for it to get paid, and you can have the seller pay for your closing costs, but this is something that you have to negotiate. Now, when you're buying anything, it's really important to have all your questions answered up front. So I'm going to link my Calendly in the description. Book a call with me and we'll go over any questions that you have in regards to homeownership.